Actually, a lot of people will be watching the stock market to see how it does today. Last week, you may remember, it marked the worst week for the S&P 500 in more than 2 years. Investors are worried about a growing number of issues that could really affect how much money corporate America makes. On Tuesday, the head of the Federal Reserve, Janet Yellen, hinted that they could start raising interest rates sooner than later. Joe Krier is president of Krier Wealth Management. He's joining us this morning. Joe, you say this pullback really is overdue, but healthy in the long run, which is kind of hard to believe, but you're the expert.
Well, it's a pretty big deal when the Federal Reserve talks about raising rates because, you know, they took some serious measures starting back in 08, 09 to try to rescue the economy from all-out collapse. And they've been going way overboard, doing things that we've never seen in history. And all of a sudden now they're saying, okay, maybe this economy is sturdy enough to stand on its own 2 feet. So that's a good news is bad news type situation.
So for the layperson like myself who's not an expert, it seems somewhat surprising considering what we're seeing in Ukraine, Israel, Iraq, Argentina, for example. I mean, they're facing terrible times.
Yeah, there's enough going on in the world that could spill over to our shores. You know, you mentioned Ukraine. If economic sanctions are there, it hurts European companies, which hurts the U.S. Of course, Israel as a center of influence in the Mideast. Iraq is pretty much out of control at this point. Argentina defaulted on some debt last week that we had lent them money and they're not going to pay us. And Portugal's largest bank was on the brink of failure. There was a rescue package yesterday for that. So some fears are settling down as we go this morning. But when you add all this stuff up, it's enough to make investors and institutions want to say, hey, maybe we should back off a little bit. Let's raise a little bit of cash.
Well, and you bring up a good point, too, because you look at all of those countries and you're like, that's so far away. We don't have to worry about it here. But it's a domino effect, is it not?
Definitely. And I mean, the world is more interconnected now economically than it ever has been before. And I think the key word here is contagion. If a Portuguese bank goes down, does that affect a Spanish bank, which affects a British bank, which affects a U.S. bank? And we've seen that before with our own real estate crisis. The banks in the U.S. fell on hard times, and it became a global phenomena within 60 days.
So when do you think interest rates could go up? And if and when they do, who will be impacted by this? Will it be people who are buying homes, and how will they be impacted?
Yeah, that's another good news is bad news situation here. Definitely home buyers are going to pay more for their mortgages when rates go up. The consensus view right now is end of next year. Last week, that was kind of bumped up to the beginning of next year as far as rates going up. And the fact is that Wall Street doesn't know. The Federal Reserve wants to raise rates a little bit because they want to have that tool in their toolbox in case the economy starts going downhill again. They want to be able to lower them to ease things. And we've been sitting here with interest rates at 30-year lows for 5 years now, and they're worried that maybe the economy will just get cranked up too much and all of a sudden it's growing super fast and then things are out of control. Then they have to raise rates rapidly to slow it down, and nobody wants to go through that situation.
It's definitely a balance. Joe, thanks so much
for being here. Good to see you, Jen.
I do appreciate it. Good to see you as always.